Hello, welcome back. In this video, we're going over all the basics to the S Corporation. So I'm going to cover everything you really need to know to understand the S Corp you already have, or if you're considering forming an S Corp. After you watch this video, be sure to check out the spreadsheet template videos I have in this series where I show you a spreadsheet template from my course, Choosing the Best Type of Business, When and Why to Form Each Type, in which I compare the different tax implications for different types of businesses. And in my course, you can even enter your own amounts. So be sure to check that out. It's a really cool spreadsheet. If we haven't met, my name's Amanda, and you're watching The Business Finance Coach, my YouTube channel, where I simplify business to help you succeed, because I truly believe that the world needs what you have to offer through your business. And that's why I give away a free business spreadsheet template that walks you through basic accounting and quarterly and end of year taxes. So be sure to check that out if you need something like that in the description below. Now let's jump into all about the S Corp, everything you need to know. So the first thing is that the S Corporation is a tax election. A lot of people will say, should I be an LLC or an S Corp? But that's not the right question to be asking. Every state has two types of businesses, and you can actually see this in a cheat sheet from my Choosing the Best Type of Business course right here. So there's a legal type of business. Your business is formed under legal state law, and then it has a tax type of business for how it's taxed over at the IRS. And so the S Corporation is just an election that legal business entities can choose to elect for taxes. I won't go further into that in this video, but you can check out a video I'll have linked in the description below called LLC or S Corporation, in which I go super deep into that topic. So how does the S Corporation work? The S Corporation for taxes is very similar to the partnership and the corporation. It combines parts of both. It's very much like a partnership return in that the business doesn't actually pay taxes. It has to file its own business tax return, but all of the activity from the business flows through to the owners on what's called a Schedule K-1, which is attached to the S Corp business return. There's a K-1 for each owner, and it reports their share of the business activity. So then the owner reports the Schedule K-1 on their personal tax return, just like you would a W-2 or a 1099. However, the Schedule K-1 has a lot more numbers on it because a lot of the business activity actually flows through, it's called stated separately, and it flows through to the owners to be treated however it ends up being treated on the owner's return. So the S Corporation is like a corporation in that if you're an owner that works in the business, you actually have to pay yourself as a W-2 employee. And you have to pay yourself at least reasonable compensation, which is about the amount that it would cost you to hire people to replace yourself. Now, I have a lot more details and explanation for how to do that in my course. It's really a fairly complex topic, so that's all I'll say about it here. So why would I elect S Corp status, right? Why would I do that? Well, most people do it to save taxes, and that is a good reason to do it. But the reality is, although the internet would suggest that everyone saves taxes in the S Corp, it's not exactly the case. Due to the complexities of our tax system, it really depends on your situation. And that's why I made that spreadsheet template so that you can actually compare scenarios. Plus, business professionals are running a business, right? And so I think they've kind of contributed to this misconception because, well, they charge people to form an S Corp, right? It's an additional service. And so unfortunately, it's proliferated and put many people in the S Corp when they maybe shouldn't be there, because you don't want to be stressing out about a bunch of extra steps and business complexities and paying yourself as an employee if you would be better off focusing on just growing your business, right? As a business owner, you've got to decide what is most important for you to focus on. Now, I do have all sorts of trainings to help you with this type of stuff, but still, you've got to make that call, right? And so that's what I'm helping you do in this video and the next videos in this S Corp series. But first, let's just talk about how it could save you money so you understand. So to do that, we'll talk about how you're taxed from the activity from the S Corp. So first of all, you're going to have that W-2. Second of all, you're going to have ordinary business income, which is the activity related to whatever you're in the business of doing. Income minus expenses equals net income. Now, your W-2 wages actually are an expense to the business, so it reduces that amount and it gives you your net income amount. Now, this amount is much like if you were self-employed, you pay taxes on your sales minus expenses. And so your W-2 wages plus the second thing you're taxed on, the ordinary business income that comes through on that Schedule K-1, you're basically in the same scenario with a lot of extra steps, but it's coming to the third area. So if your business is doing really well and you're making a lot more money, also if you have partners who have invested and you're the worker, you could end up getting reduced taxes when the business is doing really well, far faster than as a single owner in the S Corp. And essentially, the third way you're taxed is if you take money out of the business. That's tracked, and then you either have no taxes on it if you were taxed on those dollars in past years, and we use what's called basis to track that. So that is another thing that must be tracked. Again, I have a course about that too. And then once you have withdrawn all the amounts that have already been taxed, any extra amounts of distributions are taxed at the preferential rates that you would pay for dividends, or if you invest in shares and buy and sell stocks or have any implications like that at the end of the year, you're taxed on those preferential tax brackets of 10, 15, and 20%. And so those are typically lower than your ordinary tax rate. The new tax brackets have a bit of overlap for people in very specific situations, but generally it's less than your regular income tax rate. And so that's really where the biggest savings is with the S Corporation. So that's the biggest savings area. And essentially, so why would you elect S Corp? You'd elect S Corp if it's going to save you money, if you're in a position where it's going to save enough money that it's actually worth putting in all the extra energy of having an S Corp. So lastly, how do you elect S Corp status? You elect S Corp status by first electing to be taxed as a corporation, which you do using Form 8832 through the IRS. Once you've formed a corporation, you can then elect to be taxed as the S Corporation on Form 2553. So these forms are just allowing you to elect to be taxed as a corporation and then as an S Corp. That's just the process and how it works. And again, these are just elections for taxes to change the default way your legal business would be taxed. So that's all for the basics about S Corp status. I'd love to hear any questions you have in the comments below. Let me know where you're at. Have you formed an S Corp? Thinking about forming an S Corp? Definitely check out the other videos in this series, going over the spreadsheet template from my course, Choosing the Best Type of Business to Form, and check out the links for more videos and information. If you're new here, consider subscribing if you enjoyed this video, or give it a like. And otherwise, I'll see you next time. Bye.